Okay, class, welcome back to Accounting 230. We're now going to talk about the income statement. Before we talk specifically about the income statement, I want to point out revenues minus expenses equal net income. That's basically the income statement. Our revenues are our sales, those items that we go out and sell to make money for our business, minus the expenses that we have equal our net income. Typical type of expenses would be salary expense, rent expense, supplies expense, okay? Those are some very typical type of expenses that we would incur. So our revenues minus those expenses give us our net income. Now, the income statement is a formal financial statement. The last video we went over was the balance sheet, okay? That's also a formal financial statement. But the balance sheet, remember, shows assets equal liabilities plus equity. Okay, it shows us how we get those assets, all right? And it can be a comparative and classified balance sheet. Comparative meaning it's showing between years. An income statement can also be comparative. They could also show multiple years of numbers here, of amounts, all right? So let's look at specifically the details within the income statement. A typical income statement is going to show the sales that we have during a time period. So typically this time period is going to be for a year. So what were the sales for a year? So now I put sales here, and I just put X's because I didn't put dollar amounts in there, but obviously there are going to be dollar amounts in here, okay? For big corporations, it can be millions and millions of dollars, okay? Next, cost of goods sold, the cost of the item we sold. So for example, let's say that we're selling tables. Let's say we sold a table for $1,000, okay? So that would be sales of $1,000. Well, that's not really our profit from that. What did it cost us to get that table or to manufacture that table? That's what cost of goods sold is. It's the cost of the item that we're selling. So for example, in this case, this big table that we're selling, we sold it for $1,000, but it may have cost us $700 to manufacture. So the sales is $1,000. The cost of that item that we just sold is $700, so then our gross profit from selling that item would be $300 in my example. Okay, so in an income statement, once again, they're going to show sales minus cost of goods sold give us our gross profit. After that, we're going to subtract out all of our other operating expenses, those normal day-to-day, normal business type expenses that we incur. After that, we'll subtract out such things as interest expense, other income and expense items. There's all sorts of those things. We're not going to go over those right now, but there can be some other income and expense items that don't fit within these categories up here. Okay, they're not things that we normally do in our business on a day-to-day operations. Okay, and then lastly, our taxes expense. Obviously, taxes need to be paid for our business, so that is an expense. So we'd have that there. So all these items here would be subtracted out, and that would get us our bottom number, which would be our net income. So that's the whole purpose of the income statement, to show the activities during the year, revenues minus all of our expenses, to get to our net income. So that's why up here I said it's revenues minus expenses get us net income, but the official income statement is going to show in more detail the revenues and more detail of the expenses. All right? The next video we're going to go over is on the format for the statement of retained earnings. You'll see how that fits in within here, because this net income is going to be used for our next financial statement. All right? Good luck. Thanks.